Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 12th of July. Markets have struggled to make much progress this week. There's been a slight revision in growth estimates and whether there actually could be lower growth on the horizon. This is driven by a couple of things. First of all, the populous areas which the Delta variant has continued to grow in is causing some concern in terms of global economic recovery. And indeed, of course, we've got Fed tapering at some point, although the dates have yet to be confirmed. It's clearly moving towards the top of their agenda in terms of their current discussions. So what we've seen is a move towards the haven assets such as bonds, with the fact that yields are now on the way down, suggesting that lower economic growth might be around the corner. In terms of the UK, GDP growth in May was up 0.8%. It leaves us slightly down on pre-pandemic levels. We're still another 3% away, and the number did slightly miss expectations as well. That being said, there were some positives underneath the bonnet. The services sector, for example, obviously benefiting from the easing restrictions, saw its figure up by 25%. That's against some fairly soft comparisons against a year ago. Nonetheless, there could be further to go, with a fuller impact from the easing restrictions expected to come through in June. And of course, that could be bolstered by the amount of staycations in the UK and indeed the level of savings that we're currently seeing. So despite the difficulties over the last week, the indices all remain comfortably ahead in the year to date. The Dow Jones is up 12.5%, the S&P 500 up 15%, the Nasdaq up 13%, and the FTSE 100 up 9.4%. Turning to next week, there's a few trading statements worthy of attention. The first one is Burberry. The shares at the moment are up 25% or so over the last year, which is a good result considering the backdrop that they've been playing against. A couple of things to look out for. Obviously, store closures and reduced tourism are likely still to be having an impact. There's obviously, very importantly, look out for any update on China within the Asian region. It's a very important market for Burberry, and whether their continuing success on their brand heat is still washing through. This is obviously designed to attract a new generation of younger customers. Staying with the fashion theme, there's also a trading statement due from ASOS, as seen on screen. Share price up about 55% over the last year. Obviously recently acquired the Topshop suite of brands, which should engage it in again a new part of an audience and increase sales. Last time we heard from them, revenues to February were up 24%. Within that, UK sales were actually up 39%. So with the slight concern about economic prospects for their 20-somethings core audience, it will be interesting to see how trading is going there. And finally, the house builder Barratt Developments shares are also up over the last year. Obviously, a lot of tailwinds at the moment in terms of stamp duty holiday, mortgage availability and so on. So the metrics to look out for in terms of this trading statement will be the likes of their net cash position at the moment, their forward sales, their build completions, and indeed any restrictions that they are feeling, as we recently heard from Persimmon, on the restriction of raw materials in the supply chain. Thank you for watching. Have a great week.